You know what's strange? When people talk about Indian startups like they're this glamorous venture capital fueled Bangalore thing. And for a long time, that was kind of true. But something shifted. And I don't think most people have caught up to it yet. Last month, Startup India quietly celebrated its 10th anniversary. The government put out a bunch of data, and buried in there was this stat. 48% of all recognized startups are now based in Tier 2 and Tier 3 cities. Not Bangalore, not Gurgaon, cities like Nashik and Ahmedabad and Kochi, nearly half of them. And at the same time, the biggest names in Indian tech, Flipkart, PhonePe, Zepto, OYO, they're all racing to go public. The IPO pipeline this year could cross 50,000 crore rupees. So you've got this really interesting tension. On one end, you have the billion-dollar listing and the stock market frenzy. On the other, you have 22 lakh people whose job exists because someone in a Tier 2 city decided to start a company. Well, both of those things are true at the same time. And I think understanding how they connect is actually the most important business story in India right now.
You're listening to Nelson John 360. Nelson John 360.
Hey friends, welcome to Nelson John 360. I'm Nelson John. And today we're going to pull apart India's startup ecosystem, the unicorns, the IPO frenzy, and this other number that I think deserves way more attention than it's getting. Let's get into it. All right, let me set the scene with something that still kind of blows my mind. When Startup India launched in January 2016, the country had roughly about 400 recognized startups. 400. I could fit them in all one WhatsApp group. That was the entire ecosystem. Fast forward to right now, March 2026, and that number is, simply take a wild guess, how much? Go on. It's 207,000. From 400 to over 2 lakh in 10 years. That's not incremental growth. That's a complete transformation of the economic landscape, right? And out of those 2 lakh companies, 126 have crossed the $1 billion valuation mark. India is now the world's third largest unicorn ecosystem, behind only the US and China. The combined valuation of these unicorns, well, $390 billion, which is more than the GDP of South Africa, the Philippines, or Egypt. Just startups. The latest one to join the club, by the way, was NASA, an AI infrastructure company that raised $600 million in a Series B from Blackstone in February. Before that, JustPay kicked off the year as the first unicorn of 2026. You see, the pipeline keeps moving. Now, Bangalore, it's still the epicenter. 52 unicorns headquartered in Bangalore. Mumbai has 21, Gurugram 20. Consumer startups lead with 58 unicorns, enterprise applications at 40, retail at 39. And fintech is basically the beating heart of this whole thing. Razorpay sitting at $7.5 billion, PhonePe, Zerodha, Grow. These companies, they have fundamentally changed how money moves in India. But here's where the story gets more interesting and more honest. The unicorn creation pace has slowed, like a lot. 2021 was the peak, 45 new unicorns in a single year. That was the gold rush. By 23, it dropped to 2. 2024 recovered slightly to 7. 25 gave us 6. Funding overall dipped 8% last year. Investors wrote 39% fewer checks. So, is the party over? Well, not exactly. What happened is more nuanced than that. The money didn't disappear. I would say the money got really picky. Mega deals above $50 million captured 32% of total funding. Capital is still flowing. It's just flowing towards companies that can prove they're actually profitable or getting close to it. The grow at any cost, we'll figure out the business model later era, that's done. And honestly, it's a good riddance. So which brings me to what is probably the biggest financial event in Indian startup history. And it's happening right now. This year is shaping up to be an IPO year, unlike anything we've seen. Over 48 startups are preparing to go public. More than 190 companies have SEBI approvals or draft papers under review. The total pipeline? Somewhere between 2.5 to 2.65 lakh crore rupees. Let that register for a second. And the names in this pipeline aren't those random startups. These are the companies like Flipkart, PhonePe, Zepto, OYO, InMobi, Zetwork, Infomarket, possibly Razorpay. And the elephant that nobody wants to jinx, Reliance Jio, which could list at a valuation of up to $170 billion. Now, if that happens, it would be the largest IPO in Indian history, period. Let me walk you through a few of these because each one tells you something different about where India is right now. Flipkart is clearly the big one here. Everyone's been waiting for this literally for years. Founded almost 2 decades ago, acquired by Walmart in 2018, valued somewhere between $30 and $70 billion, depending on who you ask. They just got the NCLT approval to shift their domicile from Singapore back to India, which is basically the final administrative hurdle before you file for an IPO. When this listing happens, it won't just be Flipkart's moment. It'll be a defining moment for the entire Indian public market. Then PhonePe, India's UPI giant. They've filed draft papers confidentially in September last year, got SEBI's approval in January, and reportedly, they're looking to raise somewhere between $900 million and $1.5 billion. So the whole thing is an offer for sale. Walmart, Tiger Global, Microsoft, all are selling their stakes. Valuation target, $9 to $10.5 billion. And OYO, this is their third attempt at going public, by the way. Third. Which, you have to respect the persistence. They filed for about 6,650 crore at a $7 to $8 billion valuation. The hospitality market in India, has its own dynamics. And Ritesh Agrawal clearly isn't giving up on this. I already mentioned Zepto, the teenage founders, the 11,000 crore filing. But what I didn't mention is that they actually paused their IPO plans in June 2025. And this was deliberate, to cut cash burn and improve profitability. Then revived them in November when the numbers looked better. There is a very different energy from the 2021 playbook where companies would rush to list while the hype was hot. This feels more considered, more matured. And the maturity is actually the theme of this whole IPO cycle. A survey found that 48% of investors now say profitability and fundamentals are the primary trigger for backing a tech IPO. Not growth, not addressable market, not buzz, just business performance. Meanwhile, nearly half of the IPOs listed in 2025, they're currently trading below their issue price. So the market has teeth. It rewards discipline and punishes hype. That's the healthy thing, even if it doesn't make for exciting headlines. All right, so that's the money side. The valuations, the listings, the investor sentiment. These are a huge story. But I want to shift to something that I honestly think matters more than most coverage that completely misses. 21.9 lakh, right? 21.9 lakh. That's the number of direct jobs India's startup ecosystem has created as of 2025, the end of 2025. 22 lakh jobs. And the trajectory is what makes it striking. In 2020, that number was 4.9 lakh. So in 5 years, it grew by 168%. On average, each startup creates about 11 direct jobs. And when you factor in indirect to employment like supply chains, vendors, services, the multiplier pushes it to an estimated 40 to 50 lakh total. Now, why does this matter so much? Because India has a youth employment problem that isn't going away. And for a long time, the startup conversation felt disconnected from that reality. It was about valuations and founder profiles and funding rounds. You see, the stuff that mattered to a very small slice of people. But 22 lakh jobs? That's not abstract. That's someone's livelihood. And here's the part that genuinely surprises me. 48% of all DPIIT recognized startups are now in Tier 2 and Tier 3 cities. Like I mentioned before in my intro, not Bangalore, not Delhi, not Mumbai. We're talking about companies in places like Coimbatore, Jaipur, Kochi, Ahmedabad, Nasik. Startups now operate across 770 plus districts. Think about what that practically means. A 23-year-old in Jaipur who's interested in tech a decade ago, they had one option: pack a bag, move to a metro, compete for an entry-level position, right? Today, that Jaipur's tech hiring is growing at 19% year on year, Coimbatore at 24%, Kochi at 16%. And Tier 2 professionals are enjoying 20 to 48% higher purchasing power than their metro counterparts because the cost of living is so much lower. You can have a genuinely great career without leaving your career. How cool is that? That wasn't true 5 years ago. Women entrepreneurs, well, they're a huge part of this too. Over 73,000 startups now have at least one woman director. Those women-led companies have generated more than 17 lakh jobs. And half of women-led ventures are based in Tier 2 cities. That's not a footnote in the data. That is a structural shift, you see, in who gets to build companies in India today. The sectors are diversifying too. It's not all SaaS and fintech anymore. Healthcare is surging, telemedicine, diagnostics, medical devices, food and beverages through D2C brands, and agri-tech, waste management, climate tech, biotechnology. The list goes on. And these are exactly the kind of sectors that create labor-intensive jobs, especially in smaller cities. More than 5,400 startups have filed for patents. 68,000 patents in the last year alone. So the job creation is increasingly knowledge-intensive, not just operational. Now, let me be straight about the challenges, because it's not all glowing numbers. The nature of startup hiring has shifted in ways that aren't great for everyone. Fresher hiring dropped from 53% to 41%. Companies are prioritizing experienced professionals. People with 4 to 10 years under their belt now make up to 43% of all startup hires. So if you're a fresh graduate hoping to ride the startup wave, the doors are getting narrower than they used to be. The opportunity is here, but it demands specific skills, not just a degree. India actually ranks first globally in AI skill penetration. It's incredible, right? But we're staring at a projected shortfall of 1.4 million AI professionals by the end of this year. So the demand is massive. The supply isn't catching up fast enough. And the people who bridge that gap, well, they're going to write their own ticket. And let's not romanticize the startup journey itself. 90% of startups fail. For every Zepto, there are thousands of companies that burned through savings, took on debt, hired people, and then shut shop. The government created a 90-day exit mechanism to help failing startups close down without being trapped in years of legal limbo, which is actually one of the most underrated policy decisions in this whole story. But the emotion and financial costs of failure doesn't get talked about enough. Not every founder story ends up with an IPO. The funding landscape is also sending mixed signals. On one hand, the funds of funds has deployed over 25,000 crore into startups. The seed fund scheme has backed 3,200 startups. Over 34,000 startups are selling to the government through the GEM portal. On the other hand, late-stage venture capital remains constrained. There is a real Series B bottleneck where companies that prove product market fit still struggle to raise growth capital. SoftBank and Tiger Global, the two big names that fueled the 2021 frenzy, have largely been sitting on the sidelines. So where does all of this actually leave us? I think India's startup ecosystem in 2026 is past the hype phase and is into something much more interesting. The plumbing is being built under. SEBI has confidential filing routes. Companies are reverse flipping back to India. Domestic institutional capital is becoming the anchor, not foreign VCs who might pull off when global sentiments shift. 48% of investors care about profitability now. That's a market that's growing up. Now, if you're an investor, this is arguably the most interesting IPO window in Indian history. But it's not 2021. So you can't just buy everything and assume it goes up. Half of last year's IPOs are underwater. Due diligence matters. Unit economics matter. Governance matters. So if you're a job seeker, especially someone in your 20s, the playing field has genuinely expanded, but it rewards specific skills. AI literacy, data, cross-functional thinking over brand degree names. And don't sleep on tier 2 cities. Places like Coimbatore, Kochi, Jaipur, Ahmedabad, the career math there might actually work better for you than in Bangalore, than in Pune, than in Mumbai. So if you are just someone trying to understand where India is heading economically, this is it. 2 lakh startups, 22 lakh jobs, $126 billion companies. An IPO wave that could reshape public markets for a generation. Well, you see, this is not a tech story. It's an India story. The real test now is whether we can create more unicorns. We have proven we can. The test is whether we can make this thing truly inclusive, reaching every district, every background, every kind of ambitions. Well, the early signs say yes, but there is a lot of work left. That's all we have today on Nelson John 360. If this one made you think, share it with someone who needs to hear it. Rate us, subscribe, leave a review. It helps more than you know. I'll see you next time with another story that matters. Stay curious, stay informed, and keep building.